Let us look at how accounting is actually defined. Basically, what are the official definitions, how accounting is defined. Accounting, they say, is the art of recording, classifying, summarizing in a significant manner monetary transactions and events, interpreting the results thereof, and communicating the financial information so that the users can take informed decisions. Having said that, let us try and understand each and every term individually. Accounting is the recording. First and foremost, every transaction needs to be recorded. So, if we talk of the grocer, each time he buys material, he records it, he sells, he records it, he pays rent, he records it, he has a person who comes to clean the premises, wages are paid to the cleaning person, he records it. He records the telephone charges when he makes payment, he records the electricity bill charges when he makes payment, etc., etc., etc. He borrows money, he records that, etc. So, in a chronological manner, every day he makes a record. It begins with first recording. For those of you who have some familiarity with accounts, this stage is nothing but the preparation of what is called the journal, where all transactions are chronologically recorded, entered into. The journal may be your cash book, maybe the purchase day book, sales day book, etc., etc., etc. So first it's the art of recording. The accounting is the recording. Next, come to the point of classifying. Now every day there are goods being purchased, there are books being sold, there are expenses on tea, or there are expenses of rent, electricity, telephone charges, the helper, the cleaning person, etc. Since these are recorded chronologically, at a point in time, if somebody asked how much sales he has effected, he may not be able to say so at one shot, because sales have been recorded each time that it has happened. They're all clustered they're all mixed up together. So classifying is bringing all the sale transactions to one place, bringing all the purchase transactions to one place, bringing all payments made to his helper in one place, bringing all telephone charges paid to one place, etc. So that we know at a point in time what was the purchase made, what were the expenses on account of rent, what is the expenses for cleaning, what is the tea charges paid, what is the expense for the helper, etc., etc., etc. So this is classifying. So accounting is the recording and classifying. Again, for those of you who are already familiar with accounts, this stage is the preparation of what is called the ledger. We will be going into all these at a later session. However, for now, we need to record, then classify, and then summarize. What do we mean by summarizing? We take all these details that we know, if we were to put them on one sheet of paper, so that at a glance, we know the total purchases, we know the total sales, we know the total rent, we know the total furniture that has been purchased, we know the total payment of wages to the helper, we know total unloading charges over a period of time, transportation charges incurred, etc. All put together, let us say, on one sheet of paper. That is summarizing. At a glance, everything is made available to us. This is again for those who are familiar. This is the stage of preparation of the trial balance. Now, this recording, classifying and summarizing is done in a significant manner. This significant manner is the double entry system. It is not simply recorded in a statement form. We follow accounting all over is follows the double entry system. Follows a double entry system. This double entry system was first recorded or published in a book by a person called Luca Pacioli, an Italian mathematician who probably, in all likelihood, it is believed that this kind of system existed, but he was the first one who in the 15th century put it in a book form, and for a few centuries, 2-3 centuries thereafter, it was based on these principles that accounting records were kept. Luca Pacioli, an Italian mathematician. So double entry system is what we follow, by which we say a debit always equals a credit. There is a left hand side and a right hand side. All accounts are made in a T format. We have a left side and a right side, or a debit side and a credit side. These form the basis of the rules of accounting. So the significant manner is the double entry system. Next, we come to monetary transactions. What do we record? Do we record each and everything? No. We record only those transactions and events which can be measured in terms of money. If there is any event, however important it is, if it cannot be measured in terms of money, it does not find a place in the books of account. Next, interpreting the results thereof from this records created so far. In this method, we try and arise what is the profit, what is the performance of the business, what is the profit, what is the financial position, what is the solvency position, etc. We can interpret the results of the business, the results of performance of the business. We try to ascertain what the business owns, what are the total assets that it owns, what is it that the business owes, etc. Once all this done, this needs to be communicated, communicating the financial information. The entire accounting has evolved over a period of time based on the needs of the users of financial information. It is not just the owner of the business who needs to know the results of the performance of a business. As business has grown, as we have not just a sole proprietorship and partnership, we have huge companies where owners are scattered all over. We have different owners and different management. Owner and manager are not one and same. The users of accounting information have become many. It involves the owner, it involves the management, it involves the employees, the creditors, the future investors, lenders, other banks, institutions, etc., etc., etc. So this information, the accounting information, the results of the performance of the business have to be communicated in a suitable form to all the users. Why is this done? So that the users can take informed decisions. Therefore, what is accounting? Accounting is the recording, classifying, and summarizing in a significant manner, that is a double entry system, what all monetary transactions and events, interpreting the results thereof and communicating the same so that the users of these financial statements, of the financial information, can take informed decisions.